bull versus bear segment. Focus is on Kalyan Jewellers. Stock has been buzzing after posting a strong set of Q3 numbers. Let's hear it from Mahima, who's here to break down what the bull and the bear case scenario is, because the stock has been quite volatile in that sense. Mahima.
Right, absolutely. It's been volatile, but today it's clearly shining up and above in trade by about 10%. We've seen weakness in the stock in the past few days, but on the back of earnings, the stock is buzzing today. Let's pull up the bull versus bear case. The first case is with respect to the numbers, of course. Revenue growth was 40%. Same-store sales growth came at around 24%, so high double-digit growth there. The EBITDA margins expanded by 18%. Net profit grew by 21%, but in terms of the margins were down to 6%, and they further are expecting a further hit in terms of margins because they are moving towards the franchisee-owned model where the margins are around 5%. So margins will further go down from 6% is what the management has said. Moving on to the next case in terms of the Candor business. Now Kalyan has an online presence and which is Candor, and they also have stores, but they focus on fashionable and everyday jewelry. Candor has seen a 90% growth in its sales. Revenue is expected to grow to 10,000 crores soon. But in terms of Candor, the losses are expanding every quarter. This quarter the losses grew to around 7 crores from that 1.6 odd crore, and they've also said that they'll be adding 80 more stores by FY26 for Candor, which means that the losses might further widen for this particular counter. So that's the bull versus bear case for Candor. But moving on to the kind of case that's going around with respect to the collaterals and promoters pledging their share. In terms of the collateral which is sitting with the banks, the management has said that they will discuss or they are already in negotiation with the banks for releasing the collateral, that is land banks that they've already pledged going ahead for the debt that has already been repaid. And in terms of promoter that have pledged their shares, roughly right now 25% of promoters shares are pledged is what the management said. So that's the bull versus bear case when it comes to the pledging of shares and collaterals. The last case is where the management has said that the profit before tax growth may outpace the revenue growth going forward because of adoption of the FOCO model, that is the franchisee model. But the management has also said that they expect to repay their debt by FY27, which means that after that they will be net cash surplus, and that cash can be used either for company-owned models. So if they use it for company-owned model, the ratio between the franchisee-owned and company-owned will be around 50-50%, and therefore margins in franchisees around 5% and company-owned is 8%. So the margins even beyond FY27 will be around 6 to 6.5 odd percent. So Harsh, all in all, margins to remain range bound in the next 3 years for Kalyan Jewellers. And management also did say that if they don't use that cash for company-owned models, they might even consider buyback.
Well, it's a very, very interesting set of updates that keep coming through and on regular basis over the last month or so. The stock has been in focus for quite a while.